What is going on, guys? It is Will back with another video. So actually, I'm going to be covering Microsoft today. I think Microsoft's a great stock to invest overall. Personally speaking, I do like this 400 range to start to start buying Microsoft in. And now we also got some big news regarding Microsoft and the supply chain. So, the article came out yesterday after market hours, and then also a little bit more information came out today. The information is very light, so we're going to grab all the details as we continue on. But so far what I was able to gather is BlackRock and Microsoft are launching a $30 billion AI infrastructure fund. Now, what this means is basically together, BlackRock and Microsoft are working together, as well as NVIDIA, to implement AI into the supply chain industry. What the supply chain industry is, like trucking, just general supplies, transporting them, importing and exporting. I'm not too sure where AI plays a part. Obviously, AI can do everything, so it's probably to do something with computers or, not the actual traveling, but just ways of, making maybe smarter routes or something like that with AI. So what they plan on doing is making a data center and energy infrastructure for this project. They plan to raise $30 billion total. And analysts are estimating it can grow to over $100 billion, which is very well possible. As we all know, BlackRock owns just about everything. If BlackRock's invested into it, why not invest into it? Especially Microsoft as well, too, considering with NVIDIA. NVIDIA is one of the leading AI competitors in this industry, so if NVIDIA is with this, I'm with this. They quote-unquote, NVIDIA will serve as an advisor. So I'm assuming here NVIDIA is going to take most of the lead for the AI portion. But obviously, BlackRock and Microsoft, mostly Microsoft, is going to be running things. But the AI portion will just be NVIDIA's section to handle. They're calling this as the global AI infrastructure. And like I said before, it's to help enhance AI supply chains. As we know, we've seen in the past couple years, guys, AI is absolutely taking over everything. Even something for, like my position, if I wanted to go be a financial analyst, AI can do 10 financial analyst jobs in, a couple weeks versus, us taking months. This is kind of tricky to think about, the amount of AI getting involved with everything. It's kind of insane to think about. A lot of, jobs are going to be lost. Just a lot of things with this technology sector can potentially hurt employment rates. We have to keep that in mind. And then also, just another little section with the article. It says that investors are going to be majority USA based and partner countries. By partner countries, I'm going to assume countries that we do the most trade with, like China, maybe Japan, Canada, countries like that. But that's basically it for the article itself. Like I said before, I do like Microsoft fluctuating in this $400 range to dollar cost average into. If you don't know what dollar cost averaging is, another term is called DCA. It's when you put a certain amount of money a day into a stock, or monthly. But we do daily here. Daily is more efficient. Even if you're doing a couple dollars a day and not buying coffee, this adds up later on. If Microsoft can, stay in this $400 range for, a month or two, and you're doing $5 a day, let's just do the calculator real quick. Let's just say it's, let's just say it's 2 months in this $400 range. market days open, maybe we'll get 40 out of it. Let's say you're putting $5 a day into it. That's $200. It might not sound a lot, but let's just say Microsoft does double within the next year or next 2-3 years. That's going to be $400. I mean, you're beating inflation at the end of the day. That's the whole goal of investing, is beating inflation. So why wouldn't you want to use your money to beat inflation? So yeah, I do like this $400 range. Anything from $390 to $400, even lower, is great. I don't think we're going to see any lower. $374 is a nice range to start buying too. But these are kind of the key areas where I would be buying, is somewhere in this range right here. And then also this is another great accumulation range as well too. Here I would advise you go lightly. I would go maybe, anywhere between $3 to $5 a day. And then here I would start stepping it up to maybe $10 a day. And then anywhere outside of this range, like anywhere above 410, I would turn DCAing off, just so you could keep your average cost down. That's the whole point of DCAing, is keeping your average cost down for stocks. Retirement portfolio, it's a lot different when it comes to DCAing, but this is the most efficient way to get into a stock, make the most money out of stocks. I have track records of me DCAing into stocks and making insane amount of money. This is the proper way to do it. There's fundamental analysis, there's technical analysis, but at the end of the day, it comes down to averaging in to the best spot possible. You can't time the market, but you could be pretty damn close to where the bottom is. Okay, so now with Microsoft covered out of the way, if you plan on buying up here, I suggest hold off. We do have the Fed. They're talking about rate cuts 2 o'clock today. I would hold off. We're not sure where the market's headed. So I would definitely, if it does come down into this $400 range, turn your DCAing on. If you don't know how to DCA, let me know. I can help you out. It's very simple. This is all just free information I'm giving you. Why not take advantage of it? All right, next we're going to recap NQ. So let's talk about it. So today I took 2 trades. Today I took 2 shorts, actually. So I took a short. Where did I take the short? Oh, sorry, I took a long. Sorry, my fault. I took a long and I took a short. So my long, I went in right here. And let me tell you, this was almost a beautiful trade. It looked very good here. So I was able to enter off this inverse FVG here. Right here. I entered off this inverse FVG. We saw some type of support here. I entered it, and it looked good. We started to get a nice pump, and then a couple minutes later, I literally got stopped out by 1 point. Market completely targeted my ass. This has been happening for the past week or two, where we're not seeing. We're going to have to run bigger stop losses because the market is very indecisive. It's very choppy. So what I've been doing was I've been increasing my stop loss. Even if I increased it, I was looking for high of the day. Even if I increased it to 25, I'm still at a 1 to 2 RR, which isn't terrible. It's still good risk management. I would have gotten stopped out later on, but I probably would have shed off at 30 or at 25. I would have started shedding off. So it's just a learning lesson for myself and other traders who do run very tight stop losses. I like to run 10 to 15 point stop losses usually for the most part. That's how confident I am in my trades, but we can't do this during this whole indecisive market, so it's just an adjusting scenario we have to get along with. So we took this long, got stopped out. I was playing very light today until I saw a good entry and where I thought the market was going to flow. So I only took 2 contracts here on a long. This only resulted in a $80 loss, $78 loss, somewhere around there. No biggie. I was looking for a big move today. Waited it out until around 11 o'clock. So I waited until 11 o'clock. We formed an FVG over here, as well as a liquidity sweep up here, and then a market shift structure. The market shift structure never formed when I entered the trade. It formed after I entered the trade. I saw the immediate rejection off this 1 minute candle. I waited for it kept bouncing in this FVG area, so it was rejecting it and respecting it. So it comes back to this candle right here. I immediately entered at the top of this candle. I had a great entry. This stop loss, I obviously ran to the high of the day, which was 18 points. So yet again, I still have to learn. I should be running a higher stop loss with trades like this. That's my own learning lesson. I need to adjust to it from now on. Entered off this, we immediately got great rejection. Market structure shift took place. We immediately sold off. I TP'd at plus 40 points on this 4 contracts, so I did trade heavy here, but I was fairly confident we were going to see some downside and start sweeping these lows that we've seen. We've been consolidating during these Asia and London times, so I was definitely looking for a sell-off here. I was looking for a high of the day and then a sell-off, but that didn't happen. We got about halfway up there, or pre-market highs I'm talking about, sorry, pre-market highs. We didn't get up there necessarily, but it's alright because we still entered the trade properly, entered it, waited, and played it patient. So TP'd out plus 40, 4 contracts, and then our final TP was, I think, right here, plus 86. This was also another sweep in liquidity off the 1 hour, and then, something that, it's kind of hard to adjust to this type of trading because we have been seeing big moves, this whole month of September, but now this past week or two, we've been seeing 100 points down and then 100 points back up, 150 points down, 150 points back up, or even like 50-50, 50-50, and we fluctuate in that range. It's just range trading. So I did want to shed off a lot of my contracts. What I should have done was take out 3 contracts at plus 40, take out 1 at 86, and held one to this 4-hour low right here, which I had marked out. And it's probably going to hit this low too as well. So I guess that's where I went wrong in this trade. Other than that, I think it's perfect execution. I just think I could have worked better on TPing out of this trade. But other than that, I think it was a great trade. I mean, a beautiful setup. What a way to enter this trade. And a couple people from the Discord also entered this trade here. I mean, other than that, guys, I hope you guys have a great rest of your day. And yeah, enjoy, guys. Later. I will see you guys tomorrow. Make sure you do not trade until we hear about FOMC. I'm going to be covering it tomorrow. This is one of the most important, if not the most important headline we are going to hear in a while. Regarding just the economy as a whole. This is similar to like COVID almost, really, this headline. This headline is very important. It's going to decide our future for us. Other than that, guys, I hope you guys have a great rest of your day. Take it easy. I will see you guys Thursday. Later.